and clear wherever you are finding us from, wherever it is you're connecting from. It is dead on 10 a.m. right now. Today, I'm actually using a script to make sure that I do not go off script. Last week, I went completely off script, and many of you may have noticed my evening and morning sessions were not exactly the same. So, my name is Carol, and I'm connecting to you live from Johannesburg, South Africa. I, on this channel, deal with tax and accounting matters. I am a tax practitioner, a professional accountant, and a corporate governance specialist. And on this channel, we will be delving into those matters that are connected to your finances, your profit, your business, even you as a working person, how to make your money work for you, how to do your budget, how to make sure that you are doing well. Of course, we are dealing on in a global sense, but we will be zoning in primarily on matters that involve us in this part of the country, but it will also apply even to other parts of the country because, hey, let's face it, tax is tax wherever you are in the world. Accounting is accounting wherever you are in the world. And of course, every revenue authority over the world requires that you submit tax returns, requires that their taxpayers or the residents in their country be compliant. So wherever you are, your business needs to make a profit. Wherever you are, if you're a working person, you need to be able to, have something to show. You've been working, you need savings, you need to buy, you need a budget, you need to work according to your budget. So this applies to people all over the world. If you're just joining us, as I've mentioned, the name is Carol. Please do like and please do engage, connect with us down below, and please share this broadcast. Anyone who you think might benefit, please share it with them. Also, we on our YouTube channel, you'll see plenty other videos. You'll see many things there, shorts. Please do connect. And most of all, please subscribe and join our community. We have a couple of people now that are connecting, so I think I will begin. We are live every Thursday, 10 a.m. Central African time. We are on at 10 o'clock, and I'm also trying to accommodate those who tell me that they are unable to join at 10, so we are trying to do a 7 p.m. live as well. Currently on for 30 minutes, so every 10 o'clock, please do join us, please do share, and please connect with us. So I think with 12 people, we are ready to start. So today we are talking about mostly tax. We've talked about budgeting. We've talked about what it is to make a profit, to run a business. We've talked about how you need to conduct yourself in business. But today I'm going straight in and I'm talking about tax. One of the most talked about subjects on the continent, on the face of the earth, in South Africa, wherever you are, everyone is talking about tax because countries all over the world and revenue authorities all over the world are trying to get money in. They are trying to get people to pay taxes. They are trying to stop people from evading and avoiding paying taxes. So tax is really the big thing. In other countries like in America, you'll find that you will be imprisoned, you will be fined. The punishment is hefty for people that do not comply. And we see many celebrities all over the world who have actually gone to jail because they've not declared or they've not paid their taxes or they've falsified their reports. Now, here in Africa, well, people are not quite as strict with taxes. And so we find a lot is happening, a lot of things are going through the loopholes, and people are not paying their taxes. So today I want to just talk just on a casual basis and give you some information. The first thing is I'm going to tell you what income tax is. Now, remember, I am not giving you a textbook definition because I'm making this whole session relatable to everyone, easy for everyone to understand. And so I'm just going to tell you what income tax is from a layman's point of view. Income tax is a means by which every government in the world is able to collect revenue from its citizens. So that's basically what income tax is. So each one of us that is living wherever in the world we are living, whether we're in South Africa, whether we are in Botswana, in Malawi, we had someone from Japan connecting with us the other day, in the US, wherever you are, your government requires you to pay your taxes. And the broad definition is income tax. Income tax now covers different types of taxes. It covers your VAT because it all falls under the income tax bracket. But if we are to be specific and say, what is income tax? From an individual point of view, we're talking about your payslip, what your employer deducts, which is your pay as you earn. That is income tax for you as an individual. But for a company, income tax is basically what the company would pay if they've made a profit. So those are the two broad categories that we have of income tax. From an individual point of view, it's what the company is deducting from you. That's if you're earning enough. But from a company point of view, it's what you're paying if you're making a profit. So remember, within the income tax bracket, there's also what we call provisional tax. Now, provisional tax is something that is submitted and paid prematurely. That's why we're calling it provisional. Income tax is based on actual financials that have been done, findings that have been made, and the company is satisfied that this is how much profit we've made, therefore we can pay this much tax. So when a budget is set for a government, they are told to collect several trillions or millions or billions. And of course, this is how they collect it from you and me. And this is why they're so strict, because they want nobody to fail to pay their taxes. So everybody should be a taxpayer. Every person should have a tax number. We have children, babies, who are modeling. They're doing adverts, for instance. They too need to have tax numbers because they're earning some kind of income. And therefore, they need to declare that income and they need to pay tax on that income, even at the age of 2. I had an issue the other day of a client, her daughters are in university, but their parents have opened up investment opportunities for them, unit trusts and so on. So because they are earning interest from the bank, SARS expects them to also have tax numbers and expects them to also be taxpayers and submit their tax returns. So tax is covering literally everybody across the globe, whether you're 5 years old, whether you're 100 years old, even if you're retired, you still need a tax number. You still need to know, do I submit my tax return or not? Now, remember, the one thing that's happening now is certain people will be auto-assessed from an individual point of view. So they may not need to actually file their tax returns. They'll simply find that the Revenue Authority, in this case, will file your return for you. Please do make sure you check those auto assessments. I think if you look on this channel, even on TikToks, we've posted some information on that. We've told you what happens with the auto assessment. We've also told you that SARS is looking at third party. So they're looking at your employer information, your IRP5. They're looking at your medical aid. They're looking at your retirement annuity, your bank information, all of that. That is what enables them to be able to file your return on your behalf. You gotta give, AI a thumbs up. They're doing it. They're getting all our information. Nothing is private anymore. And you gotta wonder, with the POPI Act in play, how is it that a revenue authority is getting my information, yet they still are? I suppose when you open your bank account, and you sometimes don't see the fine line which says you are allowing the bank to give your information out to places like SARS. And remember anyway, SARS is the first bank of the land. They are the most powerful bank. They can deduct money from your account if you owe them. They can attach your bank account. All of that. Somebody is asking me, can I please say hi? Hi to everyone. Hi. Sorry, you must have connected a little bit late. I had already said good morning. I had already said my greetings. I had already introduced myself. Maybe let me do that. So the name is Carol and I'm connecting to you live every 10 a.m. Please do join us. Please like the broadcast. Please also go on to our YouTube channel after this, subscribe, and watch some of our other videos. Share this with someone who might be interested. On this channel, we discuss tax and accounting matters. So if you're interested in making money, interested in running your business well, if you're interested in having savings as an employee, then you should connect. So I've said my hellos again. We are on also tonight at 7 o'clock. I need to say that to you. So back to what I was discussing. If you are earning income and you are working somewhere, you will get a payslip. They will deduct your pay as you earn. And whether you like it or not, before you earn your income, pay as you earn is already deducted, bam. But when you are running a company, it's a little bit different because pay as you earn is not deducted on a monthly basis. And pay as you earn is not deducted before you earn. So therefore, as a business owner, you have a lot more free will. You have a lot more leeway. And that's why the revenue authorities all over the world are watching businesses very carefully, because businesses are the one area where taxes are not being paid fairly. People are under declaring all the time. People are failing to even declare. Some people are declaring their companies as non-trading, dormant, not submitting returns, yet there actually is funds going in. So there is an effort to try and curb on these activities and to try and make sure that as much as the individuals are paying tax, the companies are also paying tax. Let me go to my script. So we've talked about the fact that individuals are paying tax, companies are paying tax. If you have a partnership, it's exactly the same. Partnerships also need to pay tax. But remember, if you are two partners running a business, the two partners themselves need to declare the profits that they've made from the business in their personal capacity. So the partnership itself does not file a return. No, it's the two partners or the three partners within the partnership that will file the return, declare their taxes, and pay their taxes. So it's the same even if you have a joint venture. If you have a joint venture, you have maybe two companies coming together, you need to share your profits. And based on whatever profits you've made, you can then pay tax. I get a lot of people asking me about dividends. Dividends are one way in which, as a company, you can pay your shareholders. If you've made a profit, remember, you cannot declare a dividend if you've not made a profit. You are not allowed legally by the Companies Act to declare that dividend. If you've made a profit, then you can declare a dividend. Then you can actually pay your shareholders. And remember, dividend tax, at least here in South Africa, it's only 20%, which is much lower than the tax you would pay if you were receiving income as a shareholder and declaring it in your personal capacity. So the dividend tax is deducted, what we say at source. What do I mean by that? It means as the company decides to say, okay, today we are paying dividends, for instance, 200,000 to each shareholder or each director, they would then deduct the 20% before they paid over to you. So then you, as the shareholder, now receive the amount after the deduction. The company will still need to submit those dividend taxes that they have deducted from you. And that's another return that we do, a dividend tax return. They would need to declare that they have paid out dividends, they have deducted the tax, they've withheld the tax, and they would need to pay the tax. So that is one way as a shareholder that you can earn income without paying high rates of tax. You can declare a dividend. Now remember, it's also quite dangerous to keep declaring dividends. It's usually done maybe quarterly or twice a year or just once at the end of the year, a lump sum amount, dividend declared, and people are paid. Shareholders receive something. So that's one way in which you can pay slightly less taxes as a shareholder and still earn an income. Please share that with your director, your shareholder. If you're working somewhere, you can look intelligent. Tell them, hey, listen, you can pay yourself a dividend. You don't have to pay yourself a high salary and pay tax. Having said that, many shareholders and directors I'm finding are not paying themselves salaries, are not deducting tax. And right now, you may find yourself in hot soup because if you have not filed your personal tax returns, declaring the income that has gone into your personal bank account, you may find it very difficult now to suddenly have to pay all those taxes going back several years. So let's go back to the personal tax and all of us that are having to submit our personal tax returns, whether you're an employee working somewhere or you're a director of a company, the same rule of thumb applies. That company should be registered as an employer. That company should be doing pay slips every month, deducting pay as you earn in UIF. And then at the end of the financial year, they should give you what we call an IRP5, the tax certificate. Now, the IRP5 can be a very simple one. I get sometimes clients who all they do is the basic salary and the deduction, and that's all. Then we have complicated ones where someone has pension that they're doing at work. So there will have to be an element of the pension that the company is contributing and that the employee is contributing. There could also be medical aid. Some employers assist their employees and they do maybe 50-50 medical aid or 100%. That complicates the IRP5. It complicates the tax deduction. It also means that you can get credits on a monthly basis, so you can reduce the tax that you're paying. What do I mean by that? If I'm working somewhere, I have medical aid that I have with Momentum or Discovery. On my payslip, will reflect that I have medical aid as a deduction. The credit now comes into it because SARS is allowing us some kind of a refund. We call it a credit. So that means on a monthly basis, my tax is going to be reduced because I have medical aid deductions going through. So my tax itself, my pay as you earn, will be reduced monthly. It's the same with retirement annuity. Remember, retirement annuity is not the same as pension. So if on my IRP5, on my payslip, I have retirement annuity with some, maybe it's Alan Gray or whoever you're using. If I am contributing towards my retirement specifically every month, and remember there is a cap, whatever I'm contributing, as long as it's below the cap, all right, it then means, and by the way, the cap is sitting at about 28,000 now per month. If I'm contributing, I can also reduce my tax that I'm paying on a monthly basis. So instead of waiting until you submit your tax return and getting your refund, you can actually get the reduction of your tax on a monthly basis. So more money in your pocket, more money in your hand, you're able to spend more. So what am I saying? I'm saying your IRP5 can be complicated. It can have pension, it can have retirement annuity, it can have medical aid, it can have travel allowance. Once you have travel allowance, you must know that you need a logbook. If you are doing work travel, please make sure you keep a logbook. Make sure the logbook is in line with SARS. If your logbook is not in line with SARS, in other words, it doesn't have all the different trips, it doesn't have an opening balance, it doesn't have a destination of where you've gone, that logbook may be rejected by SARS. So in a nutshell, that IRP5 will have everything connected to your earnings in the workplace. Some of you have perks, you have benefits. Maybe you have a company house, a company car. Any of those cell phone allowances, anything being paid to you or anything in which you're benefiting, where the company is paying out or giving you a benefit. Some of you, it's school fees, maybe, for your children. If it's coming as a benefit to you as an employee, guess what? It needs to be declared as a perk and you will be taxed. Of course, there are a few non-taxable allowances and it has to be within reason, but more and more SARS are rejecting those. So when you then submit your return, if you had a non-taxable allowance that you every month were not paying tax on, you might find that on your auto assessment, SARS has reversed that non-taxable allowance and they have taxed it, which will then mean You were not expecting to owe SARS anything. Now you're suddenly owing them. Why? Because in your original monthly payslip, something was being treated as a non-taxable income, but SARS may have changed that and made it taxable. So here's some of the issues that we sometimes come across in practice. People say, why am I owing SARS? I've been paying my taxes every month. I've been, seeing my payslip. It's being deducted. Why am I owing SARS? Look at several things. Another thing, another big reason why people owe SARS is if you work for 2 different employers or 3 employers within the year, remember, each employer is doing their own calculation of your tax based on an annual table. So they can decide that, okay, Carol, okay, this is where we're placing her because she's earning from us so much. Therefore, this is the tax that she's supposed to pay. Now, the next company that you're working for, whether simultaneously or later in the year, will do their own calculation based on their own tax tables, the same tax tables, by the way. But because you now have 2 IRP5s or 3 IRP5s, guess what? You may no longer be taxed at that percentage when SARS combines your income. Because what's going to happen is SARS is going to combine that income and they're going to now say for the full year, you earned 2 million rands. Now the 2 million rands, when they put it on the scale of tax tables, you might just find that instead of you paying 35% tax, maybe you're now paying 42% tax. And this is why a lot of people struggle with liabilities to SARS because they can't fathom why I'm owing SARS. And it's because of these little things. So I think next week I'll dwell more on the tax returns because we're in that period right now where everybody's filing tax returns. I'm sure those of you who've tried to go in e-filing this morning, you'll find that e-filing is slow. E-filing is our method of filing here in South Africa. We file online using e-filing. Every country will have its own. And we are finding that it's very slow this week. Why? Because the tax season opened on the 1st of July. So from the 1st to the 12th, SARS is busy at the moment doing all your auto assessments. Some people actually got auto assessed just before the 1st of July. So it's going to affect a lot of you. It's going to affect the speed at which you will work. It's going to affect your ability to go. I even tried to go into e-filing last night. I couldn't even go on. But I'll tell you, the best times to go on, it'll be a little bit better off peak hours, like after hours, midnight, that sort of time, you'll be able to go on. You will find throughout July, that's going to be the situation. Also, if you are exporting as a company and you normally get your refunds, you'll find that during this tax season, peak season for personal tax, your refunds may be delayed. Why? Because SARS has to prioritize individual refunds, personal tax return refunds, before they look into companies. So at this stage, there's a lot of juggling around going on. Even if you had cases pending at SARS, an objection pending at SARS, it might be delayed. You might have a turnaround period of 21 days. It may not actually happen because it's the tax season now. So all hands on deck. Everyone is focused on making sure that personal tax refunds and returns are completed on time. And of course, everything else tends to take a back seat. So I think I guess the advice is be patient. If you need to go into a SARS branch, make sure you're up early in the morning or make an appointment because this time of the year, it will be inundated with queries because it's the tax season. So enough said about the tax season. I think what I want to now go into is issues of what it is that you as an individual should be expecting as far as tax is concerned, as far as SARS is concerned. Many people have a misconception. They say to me, oh no, but shouldn't I be getting money back from SARS? I mean, we pay so much money. No. Listen, SARS and any other revenue authority are not there to give us what we call refunds or rebates. That is not their purpose. Their purpose is to regulate income and to collect revenue on behalf of the government, whether it's through VAT, whether it's to pay as you earn, whether it's through income tax. That is the reason why they are there. And so I get a lot of people who come to me and say, I've been paying tax for so long. I've never received anything back from SARS. And mind you, these are people who are running their businesses. They're not even paying tax as employees, and yet they still expect to get a refund from SARS. Unfortunately, that is never going to happen. I'll tell you one group of people that get refunds from SARS more than anyone else. Your exporters. In any country, your exporters are your jewel. Why? Because they're taking your goods out there. They're taking your services out there. Your name is growing in the international community. Of course, also volumes of sales are leaving the country. So exporters will always be treated with that little bit more respect. And they're also earning foreign currency for the country. Therefore, when exporters have valid VAT refunds, they are more likely to get them quicker. Remember, they also go through scrutiny. So it's not simple. It's not just a case of because I'm an exporter, I'm going to get my VAT refund. No, it'll simply be a case of, are you a valid candidate? Have you paid VAT in South Africa, which you can now claim back? Have you proved that you've actually exported goods and services? They've left the country. Your customers outside of South Africa. Have you proved beyond reasonable doubt? Only once you've done that, then you become a candidate for getting a refund. So here's where I want you to not be on the wrong wavelength. Please get this out of your mind. Do not think that just because you're a taxpayer in South Africa, paying in Botswana, wherever you are, and you're paying tax, you're buying goods, you're paying VAT, that entitles you to getting a refund. No, that is not the case. It's a specific category of people. Sometimes you have clients who are buying stock and they're paying a lot of VAT, and they are trying to get refunds because they've paid in all this VAT and they've not actually sold or charged VAT. It is very difficult to get a refund in those instances because you're not actually importing. You've just bought a lot of stock and you have to now prove to the Revenue Authority, how did you buy all that stock, or how did you import from China and pay the VAT that you want back? So it's not that easy. I just want it out there. A lot of people register for a VAT number thinking, oh, now I can get refunds. Now I can get money from SARS. No, it's not an avenue from which you will get money from SARS. It's actually the other way around. VAT registration is designed so that you and I, when we have VAT numbers, in other words, when we have VAT numbers, vendors, we can actually become a channel through which SARS and other revenue authorities can receive funds. So we now become very high profile to the Revenue Authority. We are highlighted. How much sales are we making? Are we paying over the VAT? And so it goes. I see we are running out of time. We are 28 minutes in. It's a 30-minute session. And I hope those of you who connected, you found this beneficial, you found this engaging, you found this interesting. Please note, every 10 a.m. we are connected. Please share this link with someone who would benefit. Remember, on this channel, we deal with tax and accounting matters. It's 30 minutes every week. We're also on in the evening for those who are not available in the mornings. We are there at 7 o'clock every Thursday. So Thursday is the day. Every Thursday, 7 p.m., we are here. We are engaging. I'm a business coach, and so I will be coaching you all about tax, all about accounting, all about business, how to keep your business compliant, how to make money, how to stay out of trouble, and most of all, how to run your business efficiently in a righteous way. So having said all that, please do go onto our channel, subscribe. You will get notifications. You will get educated. You will get to know what we are doing. You will network with people on here. And most importantly, please also become a part of our community. Watch our videos. get informed, get to know what's going on around the world. Having said that, have a warm rest of the day. Enjoy. Thank you for being a part of today's session. I thoroughly enjoyed myself. I hope you enjoyed it. The time flew by. I have no idea where the time went, but thank you. I see some of our other clients saying hi, and I'm saying hi back, and I'm saying bye to you all. Thank you, and God bless you.